You ever glance at a financial chart and just feel like it's speaking a language from another planet? Well, today, we're going to change that. We are going to decode the market's secret language, and we'll start with its most basic, most fundamental word, the candlestick.
So here's the game plan for this explainer. We're going to completely reframe how you see these charts. First, we'll break down what a single candlestick is. Then, we'll get into the juicy stuff, the patterns that show who's winning, the buyers or the sellers. And to wrap it all up, I'll give you a simple framework to put it all into practice.
All right, let's dive right in. You know, with any new language, the first step is understanding why it looks so weird and confusing to begin with.
Yeah, if you've ever felt totally overwhelmed staring at a trading screen, trust me, you are not alone. It can seriously look like pure chaos, just a random mess of ups and downs with absolutely no rhyme or reason.
But here's the big idea, the shift in perspective. What if each of those bars, those candlesticks, was actually a miniature story, a snapshot of a battle between buyers and sellers over a set period of time? You know, once you learn to read them, that chaos, it starts to look a lot more like a conversation.
And to understand that conversation, we need to learn the alphabet. So let's break down the single most important building block on any chart, the candlestick itself.
Okay, so every candlestick has two main parts. See that thick part? That's the body. It tells you where the price opened and where it closed for that time period. And those thin lines sticking out, we call those wicks or shadows, and they show you the absolute highest and lowest prices that were hit. It's really that simple. 4 crucial bits of info all packed into one neat little shape.
And this is the key thing, something our source material really drives home. This isn't just about numbers. It's about visualizing psychology. That long upper wick, that's the story of buyers trying to push the price way up, but the sellers were strong enough to shove it right back down. We're literally reading the market's mood.
Now, the color tells you who won that period's battle. It's pretty straightforward. If the candle is green, it means the price closed higher than where it started. The buyers won that round. We call that bullish. If it's red, well, the price closed lower than it opened. The sellers won, and that's what we call bearish.
Okay, this is where it gets really, really interesting. When you start putting these individual candles together, they form patterns that can signal some major shifts in the market. So first up, let's look for the signs of optimism, the patterns that tell us the buyers are starting to take over.
Let's start with this one. This distinctive shape is called a hammer, and it's a classic signal that things might be turning around for the better. Just look at that small body up top and that really long lower wick.
So what's the story here? Well, during this time frame, the sellers pushed the price way down. That's what that long wick is showing us. But then, and this is the cool part, the buyers stormed back in with so much force that they didn't just stop the bleeding, they pushed the price all the way back up to close near where it opened. It's like a huge rejection of those lower prices. Now, if the hammer is a comeback, this next pattern is more like a full-on takeover. It shows a much more dramatic and immediate shift in power. This is a really powerful one. So this story takes 2 candles to tell. First, you have a red, bearish candle, maybe continuing a downtrend. But then, the very next candle, this huge green one, opens lower but then rallies with so much strength that it completely swallows or engulfs the entire body of the candle before it. This is basically the market screaming that the buyers have taken firm control.
Of course, what goes up can also come down. So let's flip the script and look at the patterns that tell us the sellers are starting to win the fight.
Okay, take a good look at this. You're probably thinking, wait a minute, that looks exactly like the hammer we just saw. And you'd be right, it does. But this is called a hanging man. The shape is identical, but the meaning is the complete opposite. Why? Because context. Context is everything. This pattern shows up at the top of an uptrend, not the bottom.
So the story it tells is one of weakness. Yeah, the buyers managed to push the price back up by the end, but that long lower wick shows that for the first time in a while, there was a lot of selling happening. It's a huge warning sign that the uptrend might be running out of steam.
And just like its bullish cousin, the bearish engulfing pattern is all about a dramatic power shift. It's basically the mirror image of what we saw before.
So picture this. An uptrend is chugging along. You see a nice green candle. The next period opens even higher and everything looks great. But then, bam! The sellers jump in with overwhelming force, pushing the price down so far that the new red candle's body completely swallows the previous green one. It's a super clear signal that the sellers have just seized control.
So knowing these patterns is great, but it's really only the first step. How do you actually use them effectively? Well, you need a little bit of nuance and a clear strategy. Here's a simple, 3-step framework from our source. First, always identify the bigger trend. Remember the hanging man? A pattern's meaning can completely flip depending on where it shows up. Second, look for confirmation. Does the pattern happen at a key price level? Is there a big spike in trading volume? These things add a ton of weight to the signal. And third, hey, nobody memorizes all these patterns overnight. It's totally fine to keep a cheat sheet handy while you're learning.
So, the next time you look at a chart, I want you to try not to see just red and green bars. See the stories. See the battles playing out between buyers and sellers. Because once you start to understand the language, you can finally start asking the right questions. Like, what story is the market trying to tell you right now?